Welcome to this video presentation on the suppression of the gold price. This presentation is about gold politics that are being kept secret from the public. Although secret, these politics have a significant effect on the price of gold, as we will see during the course of this presentation. This presentation offers a summary of the key information that is publicly available about the gold price suppression scheme. The credit for uncovering most of the data I present goes to the Gold Antitrust Action Committee, or short GATA. I bundled the information about gold price suppression that is fragmented all over the net and visualized all of the different schemes that could be used to suppress the price of gold. The visualizations I offer of the information available to the public, in my opinion, are very helpful to thoroughly understand the issues involved here. It is recommended to view the videos in high quality in order for you to read the small printed documentation that is being presented on some of the slides. And yes, I know I don't speak English fluently and do have a very strong accent, but please don't let that distract from the message contained in this video presentation. For those of you that don't already know, the Monopoly Man depicted on this illustration actually is based on a real-life character. This character is no other than the infamous banker J.P. Morgan. And during the course of this presentation, the meaning of this illustration will become apparent. Chapter 1. Suppression. What's suppression? A quick look at the historical gold chart reveals the unprecedented rise of the price of gold over the last 10 years. Today's dollar-nominated gold price weighs in at an all-time nominal high. The claim that the current price of gold is suppressed and thus undervalued seems far-fetched. When the price of gold is manipulated, judging from this chart, you would assume that the cabal who is manipulating the price of gold is pushing its price up rather than trying to keep it down. Could it really be that the present price level of gold is lower than where it should be on a free competitive market where the price of gold was allowed to rise to any level? For now, this claim seems rather absurd, but one thing to keep in mind looking at this chart of the price of gold is it doesn't factor in the decline of the purchasing power of the US dollar. Looking at this chart that uses the US government's official inflation data, since 1980 the dollar has lost half of its buying power. So when we have a look at the gold chart, which is adjusted for the official inflation of the US dollar, the picture looks a bit different. According to this chart, the purchasing power of an ounce of gold represented in the 1980s was way higher than it is today. When adjusted for official inflation, the price of gold today is still higher though than the average price of $638 an ounce throughout the last 40 years. However, the way in which the US authorities have measured the inflation rate throughout the last 30 years has changed time and time again. As this chart indicates, using the same statistics, the inflation rate will differ significantly using different consumer price index calculation methods. A great and easy to understand video explanation on why the government has an incentive to make inflation numbers appear lower than they actually are, and which techniques are used to change the calculation methods, can be found in chapter 16 from Chris Martinson's crash course. This video can be found on YouTube and on the website chrismartinson.com. Now have a look at the gold chart when adjusted for inflation using the same inflation calculation method throughout the years. A very different picture emerges looking at the gold chart registered in 2009 inflation adjusted dollars using the consumer price index statistics as reported on John Williams' website shadowstats.com. In this chart, today's price of gold still is far away from reaching its 40 years average inflation adjusted price of $1,673 an ounce, let alone cleared the 1980s real inflation adjusted record of about $6,000 an ounce. Looking at these inflation adjusted charts, I can see why some people ask themselves the question why the price of gold isn't trading significantly higher at the moment. For the fact of the matter is that we are going through the deepest recession since the Great Depression. And in times of great economic uncertainty, when governments around the world spend like crazy, the flight to gold away from fiat currencies seems a very logical thing to do. In case you ask yourself why this is, I would suggest you take a look at a short YouTube video under the name The Dollar versus Gold. Taking into account the economic turmoil in the world and looking at this chart, the claim the price of gold has been suppressed for the last 15 years might be a claim worth investigating. Answering the question if the current price level of gold really reflects its true value requires a deeper understanding of the mechanisms and forces at play on the gold market. In this video presentation I will reveal the game being played that is hidden in plain sight.